Greetings, and beautiful day to you all. Um, my name is Adasa, as most of you probably are aware, and I had an experience. I wanted to share that experience with you. I think it's a very important experience, and when I really processed this whole thing, I said I have to talk to my friends, my family, and my associates about my experience, and hopefully, someone can walk away from this thing feeling uh, a little more knowledgeable about finance. But there's an even deeper lesson here that I want to touch on. And this is not financial advice, so by no means take it as law. It's just an experience that I had, and I wanted to share that experience with you. Now, um, some of you may know that I do a little bit of what's called day trading, and it's not my primary income, but it's something that I truly enjoy doing, and it can be a lot of fun. It can also be tragic. So, but I'm gonna tell you something that I experienced yesterday that it was quite the eye opener. But the one thing that I want people to understand about the stock market, and this is if you may decide one day you want to dabble in the stock market, or if you're already in the stock market. I think the most important thing about the stock market, even if you're listening to influencers or YouTubers or whatever, or your friends that do it, the most important thing is understanding the psychology of the stock market. Once you understand the psychology of the stock market, I mean, the world is yours. But you have to focus in on the psychology and how businesses, hedge funds, and individuals think. Now, just to kind of give you a little bit of background into what I do, I'm usually up every day, sometime between 4 and 5 o'clock, and I walk my dog, which is part of the responsibility of having a dog. And once you've kind of got some fresh air, you're taking a walk or try to walk at least a half a mile to a mile every day with the dog, then I immediately come in and I get on the market. Now, the stock market itself is open from 9:30 to 4 o'clock every day. Okay. But there's a thing called the pre-market and there's a thing called the aftermarket. Now, the pre-market is actually from 4 o'clock a.m. to 9:30 a.m. And the aftermarket takes place from 4 o'clock p.m. to 8 o'clock p.m. Those are the witching hours. When I tell you, that is where most of the damage gets done, and that is where most of the money is being made. Don't let anyone fool you into believing that from 9:30 to 4 o'clock is where the money is made. The real money makers are making money when the market is not even open. And most people don't even know, depending on what platform you trade on, that you even have access to the ability to trade on the off hours. Now, for someone like myself, it gets even more tricky because I trade options and I day trade options. Options can only be traded between 9:30 and 4 o'clock. So once you put in an option contract, and I'm not going to go into the details of the option contract here in this video. I just want to use this video to tell a story. And then later on down the line, I'll go into some details on how this whole process works. But when you put in an option contract anytime between 9:30 and 4 o'clock, you can buy that contract or sell that contract within those hours. But once the market closes at 4:30, you're stuck holding that contract until the next day. So that's where it gets really tricky. Okay, so I had this situation this week. Everyone knew that Meta, which is the umbrella company that holds Facebook, Instagram, companies like that, Meta was going to be uh, giving their earnings report on Wednesday evening after the bell rang. Now, anyone who's familiar with the market might say, why do they always do the announcement before the bell or after the bell? Why don't they do it in the middle? Like I said, once again, most of the money is traded when the market is not even open. It's ghastly what these people do. But until you understand it, once you understand it, then it doesn't become so much. But when you don't understand it, and you will lose your mind in this market. So every 3 months, every quarter, companies, announce their earnings. And everyone knows that Facebook has been making money hand over fist. So there was no doubt that Facebook was going to have a positive earnings report. No doubt. We all knew. So I had a couple of contracts, option contracts, which are called calls on Facebook, on Meta, because Meta was sitting at right about, I think, $710 per share on Monday, right? And that share price, I put in a contract that Meta was going to hit $720 per share in 50 days. In other words, pass the earnings report and another almost month and a half, we were going to get I was going for $720 on a call. It was almost guaranteed that that was going to happen. You know, that was going to happen. Okay, so with these things called option contracts, we have this thing called um, the Greeks. We have the gamma, theta, delta. These are all factors of your contract that control the pricing of your contract based on time, based on volume, um, volatility, things like that. That's when you start getting into more technical aspects of the contract. And so time can be your enemy or it can be your friend, you know. But I'm watching this contract, and the price on Monday, I believe, uh, we had a reversal. So even though Meta is really strong, the price started going down. I think it ended the day at something like 708. No big deal. I was affected by my deltas and my theta, which means that because the price went down, I lost some valuation on my contract, but I didn't sweat it. I'm like, no big deal. I'll make up for it tomorrow. The thing about it is, as you're getting close to earnings, the hedge funds and the big whales, the big spenders, what they do is they begin to manipulate the market even more. So in this case, they're showing a reversal. What that's doing is it's building doubt and anxiety in what they call the retail investor. That's the everyday investor. They see the price going from 710 to 708, and we're 2 days away from earnings, and people start questioning, wow, is this thing really going to, post positive earnings, and the valuation goes up. So people get nervous, especially when that theta starts to hit your contract and your valuation goes down. So you lose $100 or $200 in a day, and you start, you're like, okay, maybe I should cash out this contract. And all they're doing is scalping. They're taking all the money from the dummies. Okay, so it goes down to 708. I don't sell. I play what's called the SPY and the triple Qs, which are ETFs, and essentially they're like mutual funds. They are conglomerate types of securities, which include securities from different types of areas like semiconductors, blue chip. So it's basically a mutual fund. They're safer, but of course your payoff is not as strong. But I decided, you know what? Both of them are holding quite a bit of Meta. So regardless of which way Meta goes, I should be able to still make some money on an option contract for the SPY or the triple Qs because it's a group of stocks in there. And if I'm getting having a green day with the other stocks, and that'll offset whatever losses. So I'm kind of hedging my bets. So wake up the next day, Tuesday, and Meta is continuing to drop. Okay. It's headed towards 700. Now, there's a thing called support and resistance. And the resistance for Meta is right around that 700 area, but the support is at 680. In other words, worst case scenario, it could possibly hit $680 per share. Well, if that were to happen, then it would absolutely destroy my contract that I have on Meta because it would eat up my theta and my delta. My valuation would drop so far to make it almost worthless, and I would have to do this almost heavenly turnaround in order to make up for the losses that I incurred. So now you really start getting nervous because now it's down $9. We're down to $700, and there's no logical reason for it to be going down to $700. No logic at all. There's no rationale to support this. This is not organic. This is purely what is happening um, by the hedge funds and the people that are loading up. And keep in mind, they're also planning on shorting the market for those people that are stupid enough to pour money into the market thinking that, oh, it's guaranteed that it's going to go up. And I missed one point. When Meta went down to $700, I didn't sell. I didn't sell because right after the market closed that day, it went to 707 on the aftermarket. I can't do anything about it, but I felt like, okay, cool. It's maybe if I wake up in the morning, it'll be around 707, still closer to 720 than, not. Wednesday comes along. Now Meta's at 700, and it's doing what we call going sideways most of the day. In other words, there's money coming in, there's massive sell-offs, which are offsetting the money that's coming in. And so it's kind of floating right there in the $700 range. It's just floating. It's just floating. Now, of course, why would they not have Jerome Powell make an announcement at 3 o'clock when the market is going to close at 4 and we're waiting on earnings? And of course, Powell, he's at odds right now with the president. So the president is wanting him to lower the interest rates. Well, that would be an immediate boost to the market. But for the last three quarters, we haven't had any changes in the interest rate, but the economy has stayed strong. So if you're looking at the technical analysis, you're saying, there's no reason to get nervous. You know, Meta is going to definitely post positive earnings. And so this thing is going to turn around and I'm going to get all this money back that I just lost in the last 2 days. I didn't want to take that major hit as it was going down. So I sold my contract. And my idea was this: I would reposition myself maybe 5 minutes before the market closed when I see just how bad the hedge funds are going to hit Meta, combined with Jerome Powell's report at 3 o'clock, which I didn't expect it to be anything major. So no shifts in the market. Wednesday, I go to get a haircut at 1 o'clock. Okay. I'm up $500 on the day. So that's, I'm learning over time. If you have a $500 day, that's a good day. You know what I'm saying? Most people, they look at a $500 day and they're like, especially when you got a taste like a shark that tastes blood, and you get a taste of a really good day, like a $3,000, $4,000 day or $5,000 day, and you're like, oh, I gotta, you know, no risk, no reward, and that's what these options can do. But remember, the same thing can happen in the reverse. And I have had that happen where I've lost $2,000 in a day or lost $3,000 in a day. And you're just like, how the hell did this happen? So, and another thing too, most investors that day trade will tell you, you put your plays in early in the morning, you make most of your money between 9 and 10 o'clock. You put some more positions in play and you get out and you live the rest of your life. Enjoy your day, do what you do. I can't do that. I've tried. It's not even possible. So I'm on this thing like, all day. I'm at lunch. I'm driving in the car, because I've seen things happen in relatively short periods of time that make absolutely no sense at all. So I'm at the barber and I'm getting a haircut, and my barber will not allow me to be on my phone while I'm getting my haircut because of the constant head movement. So he's telling me, like, you got to put the phone down. I'm like, nah, but I put the phone down. I'm getting my haircut. Jerome Powell steps to the mic. I'm not knowing anything, right? I get my haircut. I go immediately to my phone. It's like 2:30, something like that. Log into my Schwab account. I'm now down $400. Just like that. And he didn't even say anything. He just said, I'm not changing the interest rates. And now I'm down $400, which means there was a $900 reversal when I was up in the morning, $500. Now I'm down $400 because I'm playing the SPY and I'm playing the QQQs, and the entire market turned around. So now I'm down. So now I'm like, come on. You know what I'm saying? Like, make it make sense. And there's no organic or logical reason why we're seeing this shift. The economy's still as strong as it was in the morning. So it's not making sense. But a fool does not sell, because once again, this is the hedge funds that are manipulating the market, and they know that people get nervous off a little bit of information and they're planning on short. This is planned in advance. They're shorting the market. They're like, yo, we're going to watch all these dummies put in option contracts, and then we can see, because of the transparency of the platform, we can actually see the volume and how many contracts are actually purchased and sold. So we look for the ones that's showing strong volume, especially something that's having the volatility that Meta is having, and you go in and you short them. And people start getting nervous because as the market's going down, they start freaking out and they follow the crowd. And so you have these massive sell-offs and then the market drops. There's nothing to support the market dropping in that fashion, but it drops. All right. So now we're at 3 o'clock. Market's down. I'm now down $400 on the day. This is where it really gets funny. Now the hedge funds start really digging in because they know that we're coming up on 4 o'clock. And once those option contracts are in, ain't nothing you can do once that bell rings. So now we've got this FOMO that kicks in because the fear of missing out, because now people are saying, well, the market's tanking right now and Meta's tanking. Meta's slowly going down to 699. It's going down to 698, 697, 696, 695, 694. So now we're getting closer to that support level, which is like $680. So now I'm thinking there's still some room there, which means that if we have a reversal after the earnings, we can go down even further. So you can get the rug pulled and you can get killed, murdered on your theta. So my thinking is I'm going to wait till 355 and I'm going to put in my contract. And I'm right now it's floating around 694. So I'm going to put in a contract that's already in the money. So I'm going to play one at 692.5. and I'm gonna play it 50 days out. In other words, it doesn't expire for another 50 days. If we stay above 62.5, if it creeps up a little bit, I make a little change. If it has a reversal, I lose a little bit, but it usually will reverse in the next 48 hours if the earnings remains positive. So I'm looking at the clock. Volume is crazy. Everybody, you got people putting in puts, you got people putting in calls. No one's knowing which way the market's going to go. And the puts and calls, those are technical terms that I will get into because I'm going to start doing more of these videos because I think that one thing that's not being touched on is the psychology and how people think. There's a lot of people out here telling you what to invest in and what not to invest in. But I think if you really want to succeed in this game, it's really about understanding how people think. Once you get that down pat, it's over. It's over. So, um, so I'm waiting till like 355. Now Meta's floating at about 694. So I feel pretty good at 692.5, which is in the money, which means I'm already in the money if this thing stays at the same level that it is. And I try to put in my contract. It doesn't get executed. It doesn't get executed. There's so much volume. It's just sitting here. So now I'm freaking out. I'm scrambling. I'm trying to change my price. The price is moving rapidly. I'm just trying to get one contract in there. That's all I want is one contract, something nice. And it's going to cost, right now at that type of share price, kind of contract that I was going to put in would be about $2,800. I have a margin account. So even though there's cash in there, I can play the margin. And if I play the margin, which is like a credit account, I can always pay back the platform for whatever I use. But I'm like, yeah, this is guaranteed. I know it's going to reverse. It's 358 now. Now I'm freaking out. My contract still doesn't go through. And so I'm back, I'm clicking. I'm like, okay, slow down, relax. You know, 359. I'm like, okay, my limit is not working because the price is changing so fast. Let me go ahead and get it at market price and put it in. I click market, click, boom, it's 4 o'clock, done. I get the notification, contract doesn't go through, it's expired. I'm like, you gotta be kidding me. You gotta be kidding me. Like I waited all day for this. You know what I'm saying? I waited all day. Contract doesn't go through. I'm sitting there at 4 o'clock. I was like, you got to be playing with me right now. Like this can't be for real. I'm looking at Meta. Meta goes to 700. Minute or two later, it goes to 705. Then 710. Then 715. It jumps to 730. So now I would have hit my strike and I'm in the money $10. No, actually I would be in the money because I had it at 69. So I'm in the money like $40 now. It goes to 740. It goes to 780. Now mind you, the forecast on Meta for the year is 800. So it goes to 750. It goes to 760. It goes to 770. I've never seen a security rise that exponentially in such a short period of time. It was absolutely ridiculous. And I'm sitting here watching it and I don't have a contract on it. And I'm literally looking at money that I'm not getting. It's that serious. Like I'm looking at money that I'm not getting. I just had to get up from the computer and just walk away. I was like, you know what? I'm done. I'm done. You know, um, because I never got executed. I literally, when it tapped out last night and it stayed at the level at about $80, it made about $80. So I would have made about $8,000 on that contract last night. I would have made about $15,000. If I'd have put two in, I'd have made about $16,000. Put in three, 24. Like, do the math. Do the math. I've seen this happen before, but nothing this extreme. And and it's a game we play. You know, it's a game that we play. Remember, it could also go in the opposite direction. But I just had to eat that one. I had to eat that one. There was nothing I could do. You know, I lost out on that money. Um, and that hurt. I couldn't even. I mean, I slept, but I really couldn't even sleep last night. Like I woke up thinking about this, and then I tried to justify it by saying, you know, well, the aftermarket, 8 o'clock, it's still $80 up. Maybe in the morning, the pre-market, you know, you're gonna see a massive sell-off. But the options contracts, the volume of options that were on it was so high that it maintained that level all the way to the bell. Insane. Insane. Sometimes you see like massive sell-offs of stock before the bell rings at 9:30, which affects the overall price. But in this case, people were just loading up on options. There were millionaires made last night. There were billionaires made last night. Like, it was insane. That type of jump in a stock in an hour's time, and it all happened after market. And get this, I didn't sell my triple Qs or my SPY ETFs. So because they both hold so much meta, and meta pumped like it did, I ended off the day higher than I was in the morning. So I still made money, but nothing near what I would have made had I had a contract on Meta. So it's just, you know, it's one of those lessons. Understand the psychology of this whole thing. I know some of you probably listen to this and like none of it made absolutely any sense to you at all. And that's fine. That's fine. Because this is not, I'm not talking basics, but I'm just giving you an idea about the psychology of the market. And it gets deeper. Like, these people that run these hedge funds and these whales, they are vicious. They don't want you to win. They don't even want you to know that you can actually win coming down, which is what I did today. Like, yo, it's went up, it's got to come back down. So I put in a put contract. I'm like, let me get some money on the way down. You know what I'm saying? But it's a dirty game. It's not for everybody, and you can lose your shirt easy. But the more you understand about the way these hedge funds think, you can almost guarantee yourself a paycheck on a daily basis, and that's no joke. I've had to learn in the last year to exercise more patience, to be more realistic, and not spread myself so thin. I trade specific stocks and securities that I know have larger, well, the possibility of larger jumps. So you make more money in a shorter period of time, and then you get out. A lot of the influencers, a lot of the YouTubers will tell you, you know, take your profits at 20, take them at 30%. Nah, some of the things I'm going to be talking to people about in this option game, especially when you have the sheer amount of retail investors that we do right now, you take your money as soon as the bell rings. I've literally been up like $1,000 at 9:31, and I'm sitting there watching it because I'm thinking, oh, it's gonna keep going up. And in 9 times out of 10, there's a reversal, and I'm sitting there watching the money go, and I'm like stupidly thinking, yeah, it's gonna turn around, it's gonna turn around, and now it's down to 400, now it's down to 300, now it's down to 200. Now you owe 200. Like, I've seen that happen in a matter of minutes. So if you're up, take your money now. If there's more profit to be made, buy more contracts so you can hedge, you know, your bet. So you have 3 contracts, sell two of them, let one of them ride. But if you riding off one contract, sell that baby. Like sell it as soon 9:30 bell rings, you're up $1,000. 9:31, sell it. 9:32, sell it. I don't care if it's 5%. I don't care if it's 10%. Sell it. If you day trade. Now there's things called leaps, which are like further out and which allow you, of course, to make much more money. But that's for the casual investor who doesn't want to keep looking at their phone or their computer all day long. But for someone like myself, like I'm taking my profits, I'm repositioning myself. Sometimes I'll wait to the end of the day because especially if you're a newcomer and you're not maintaining a certain amount of money in your account, then they penalize you for doing more than 3 day trades in a 5 business day period. So there's so much to learn, but I just wanted to share that and get that off my chest. Something feels good about kind of giving my friends, family, my associates a heads up. Yes, I could have made $8,000 yesterday. I could have made much more, but you never know. There's no guarantee in this game. But you know, you always, you know, if you're blessed, you always live to see another day and another opportunity. So we have Palantir that's coming up on August 4th, earnings, and we have Nvidia, which I believe is coming up on August 30th. Two heavy hitters. They're probably going to be sideways for the next week to a month because once again, the hedge funds are going to be playing with all the dummies that are going to pour money into either one of those, knowing that the earnings is coming up. Last time, Palantir had earnings that went through the roof, and there was a reversal then that evening because it was already factored in. So you have to watch the trajectory of the stock. If it's on a upward trajectory for a week or two leading up to your earnings, and you see that, you might want to get out right before earnings, even if you're going to get a positive report or positive guidance, because you never know, the profits may already be factored in, and they're going to pull the rug on you as soon as the market closes. I've seen crazier things happen. So anyway, stay blessed. I'm glad I had the opportunity to share this little bit of information with you. I'm going to be coming with some more information that's more personal so that you can have a more personal experience with the stock market if this is something that you desire to do. I love you all. Peace, love, happiness. Uh, you know, go give somebody a hug today. All right.